Let's rewind to 1999, a time when Nigeria was on the brink of transformation, yet the world of banking felt stuck in the past. Back then, banking in Nigeria was a privilege reserved for the few who had the right connections or enough wealth to be noticed. Marina Street in Lagos was the heart of the financial district, lined with grand banks like First Bank, Union Bank, and UBA, alongside countless small, family-run outfits that dotted the city. For most ordinary Nigerians, banking meant standing in endless queues, filling out mountains of paperwork, and often feeling unwelcome or excluded from the system. With nearly 90 banks, many unstable and poorly regulated, trust was at an all-time low. People preferred to keep their savings hidden at home, tucked under mattresses or locked away in secret places. Opening a simple account or securing a loan was a Herculean task, often reserved for the well-connected or those willing to navigate a maze of bureaucracy. The system was designed to serve a select few, leaving millions of hardworking Nigerians outside the formal economy, relying solely on cash transactions. The idea of banking from your phone, or even accessing your money outside a bank branch, was pure fantasy, something no one could imagine at the time. But as democracy dawned, and a new government took charge, Nigeria found itself in need of a stronger, more reliable financial backbone to support its people and ambitions. The old ways simply couldn't keep up with a rapidly growing economy and a population hungry for progress and opportunity. A revolution was quietly brewing, one that would soon redefine banking for every Nigerian, from bustling city traders to rural farmers in distant villages. The journey that began in 1999 was about to become dramatic, ushering in a new era that would change the face of Nigerian banking forever. In 2004, everything changed for Nigeria's banking sector, setting off a chain reaction that would reshape the country's financial landscape for years to come. The central bank, under the bold leadership of Professor Charles Soludo, issued a game-changing directive. Banks had to raise their capital base from just 2 billion to a staggering 25 billion naira. Smaller banks scrambled to merge, partner up, or shut down entirely. The number of banks plummeted from 89 to just 25, almost overnight. Suddenly, Nigeria had mega banks, bigger, stronger, and more stable than ever before. These new giants quickly became magnets for investors, both local and international. Bank stocks soared on the Nigerian Stock Exchange, and fortunes were made almost overnight as confidence surged and the market buzzed with excitement. But the good times didn't last forever. The 2008 global financial crisis hit hard, bursting the bubble and wiping out the savings of many hopeful investors. The crash exposed reckless lending and risky practices, forcing the central bank to step in with stricter regulations and tighter oversight. Recovery was slow and painful. Banks had to clean up their books, focus on sustainable growth, and work hard to regain the trust of wary investors. From 2010 to 2021, the sector rebuilt itself step by step, delivering steady returns and proving its resilience in the face of adversity. Recently, bank stocks have surged again, rewarding patient investors who stayed the course and believed in the sector's long-term potential. The boom-bust recovery cycle made banks, and investors, wiser, teaching valuable lessons about risk, patience, and the importance of strong regulation. Today, Nigerian banks are more resilient than ever, and the stock market is stronger for it, offering new opportunities for growth and innovation. The lesson? Play the long game, stay informed, and trust in the power of transformation. Nigerian banking had found its groove, and it's here to stay. After consolidation, banks dominated the stock market's value. Giants like Zenith, GTCO, and First Bank became corporate titans, with First Bank hitting a trillion naira market cap. The Fugas, First Bank, UBA, GTCO, Access, Zenith, ruled the exchange, driving much of Nigeria's economic engine. But currency devaluation often shrank their dollar value, masking their true growth. Despite this, their rise created immense wealth and funded other industries. These banks grew from local players to complex organizations investing in tech and expanding reach. Their market cap journey is a testament to Nigeria's economic transformation. The banks became the backbone of the nation's progress. In 1999, only 15% of Nigerians had access to formal banking, mostly city dwellers in urban areas. Millions were left out, stuck in a risky cash-only world. The game changer? Mobile technology arrived. With mobile and agent banking, even remote communities could finally access financial services. By 2023, financial inclusion soared to over 70% nationwide. Initiatives like the BVN unified banking identities and empowered millions, especially women and rural dwellers. Yet gaps remain. Rural areas and financial literacy still lag behind. The next goal, 100% inclusion, so every Nigerian can participate in the economy. The journey continues forward. Gone are the days of endless queues. Digital banking has taken over. What once required hours of waiting in crowded bank halls can now be done in seconds, right from your pocket. The transformation is nothing short of remarkable, changing how millions of Nigerians interact with their money. ATMs brought 24/7 access, but smartphones and USSD codes sparked the real revolution. Suddenly, banking became truly mobile, reaching even remote communities and making financial services more inclusive than ever before. Now, you can bank from anywhere, transfer funds, pay bills, buy airtime, all from your phone. Everyday transactions are at your fingertips, whether you're at home, at work, or on the move. For banks, digital channels cut costs and boost efficiency. Staff can focus on complex services, while routine tasks are handled instantly online, streamlining operations across the industry. The competition between banks and fintechs has unleashed a wave of innovation. New players and fresh ideas are pushing the boundaries of what's possible in finance, making banking smarter and more accessible. Apps, chatbots, and budgeting tools are now the norm. Personalized insights and instant support are just a tap away, helping customers manage their finances with confidence. Physical branches still matter for complex needs, but digital is the future. Most people now prefer the speed and convenience of online banking for their daily needs. The COVID-19 pandemic accelerated this shift, making digital banking essential. With lockdowns and social distancing, millions turned to digital channels for the first time and many never look back. Today, a bank's success is measured by its digital experience, not its buildings. Customer feedback and app ratings now shape the future of banking in Nigeria. The counter is gone. The click is king. The power to bank is now in your hands, anytime, anywhere. Nigerian banking will never look back. The digital era is here to stay, shaping a smarter, more connected financial future for everyone. Post-2005, Nigerian banks grew massive, with trillions in assets and soaring profits. But the 2009 crisis revealed a mountain of bad loans, threatening collapse. The government's AMCON stepped in, buying bad loans and stabilizing the sector. Today, banks are stronger, with tighter regulations and better risk management. They're more careful about lending and more diversified. Challenges remain: inflation, naira volatility, and new recapitalization rules. But overall, the sector is robust and resilient. Banks must constantly balance risk and growth. The struggle never ends, but Nigerian banks are up to the task. Their health underpins the entire economy. The future is tech-driven. AI, smarter lending, and green finance are on the horizon. Banks and fintechs are now partners, combining trust and innovation to create better products. Collaboration will drive new solutions in payments, wealth management, and lending. Nigerian banks are expanding across Africa, becoming continental giants. This global ambition diversifies income and strengthens the sector. For customers, diversify your money, embrace digital safely, choose strong banks, and stay informed. The journey isn't over, change is constant. Nigerian banks are ready for the next chapter. The revolution continues, and the best is yet to come. What do you think about this transformation? Share your thoughts below. The future of Nigerian banking is just beginning.